Okay, welcome again to another episode of Manipulation Setup. So today I want to be doing something because it's been a while since I did a video for you guys, and today we are going to be doing top-down analysis. Now I'm combining two strategies. We have the SLK strategies. As the SLK is all about key levels, and we have the normal smart money concept. So I'm going to be combining these two strategies, these two trading patterns to form my own idea of trading. Now, it's a very simple thing. What is key level? I think I've done a comprehensive explanation on key level, and the video is in one of my videos I've already posted on YouTube here. So please do well to watch that video on key levels. So today I'm just going to explain because we have a lot of pairs here to analyze. We have all these pairs to analyze, and we have limited time. I just want to see if I can use 1 hour to do this analysis from, we have the monthly, weekly, down to 30 minutes, 15 minutes, and 5 minutes time frame to see how we can know the buyers from the higher time frame, then use the lower time frame to get our entries. You understand? So let's proceed without much further ado. So this is Euro NZD. So we are going to go to monthly time frame. Let's see how where price is reacting. So we are going to use um what's it called? We are going to be using the key levels to determine where price is reacting from, right? So so what we have here is we have on the monthly time frame we have this is an A-shaped key level, and you see how price rejected from that key level. You see, so we are going to name this the monthly key level. I'm going to try to be fast because I want to beat the time and I want you to get what I am saying. So normally, okay, this is the monthly key reaction level or key level. So we have the monthly, and see how price tapped on that key level and rejected down, right? You see that. Let me off the you can use your line charts to identify these key levels, right? This is price went up, came down, and broke, then broke all this, came back and reacted there. So when you put in your candle chart, you now see the how the reaction is taking place. So you see price reacted, cleared a liquidity, a monthly liquidity, and rejected downwards. You understand? Now that is what we are seeing currently. So now this is just basically what we are seeing currently. So if we are going to clean all this, sorry, let me take this out of the way. Uh, okay, delete. Let me see if I'll just delete all these lines here because I want to work on a fresh chart so that you understand what I'm saying. So now remember, we do not trade on the higher time frames. Right from monthly, weekly, daily, we don't trade from this time frame. This time frame is our buyer's time frame. It's what we use to know what price is doing and how price is reacting and all of that. You saw liquidity was swept, right? Liquidity was swept. Then we see the downward candle, and since we saw that reaction and the week closed that very week was that very month was bearish, what we need to do is to go down to the weekly time frame, right? What is the weekly telling us? The weekly time frame too is still from here. See how price reacted from this place here. Price reacted from there. We are going to change it back to the weekly so that you see how we are framing our trading idea. So price reacted on that weekly and dropped, right? This is the key level, right? This is the key level here, right here. That's where price reacted from. Sorry. So just follow me. as I explain something. It's going to get clearer to you when we get down to daily and 4 hours, right? So we saw the liquidity sweep, weekly liquidity sweep. Now I'm going to take out this monthly because we know what price is doing. Price is already, dropping. So we are narrowing everything down to the daily and the 4 hour, right? So now what did we see? We also saw a sweep of liquidity, reaction on a key level, then a downward movement. Once we see that weekly downward movement after a sweep of liquidity, we move to daily. We move to daily, and what do we see on the daily? We saw a breakout. If I close, if I only do the line chart, what you see here, you see that daily broke out of this place. This is a daily break, right? Sometimes I just refer it to the daily break, right? All right, so now we know monthly is bearish, weekly is bearish, daily is bearish. But mind you, the same way you're looking for sales, that's the same way you'll be plotting your graph for buy. So if you look at the time frame on the weekly time frame, if you look at what's happening here on the weekly time frame, we can see that price actually reacted from the zone here on the weekly and went up to react on that monthly. So basically we are supposed to be having sales, right? We're supposed to be having sales, but now it's looking as if it wants to buy too. But just hold your horses while we continue. This is also a weekly key level where price reacted from, right? We're just trying to form our buyers, right? So now coming up from here, price reacted here and also broke the daily, right? And price reacted here and also broke. Now we are having two places. Now number one, price can tend to buy from this point. Since we are already here, price can still buy from here to this place, then sell from here downwards, right? That's what can happen. So we are keeping our options open. We are not just limiting our trade idea to the fact that we are selling, so we want to stick to the sales. We can still be looking for buys and be looking for sales. All we have to do is just look at what price is printing and how price is printing. So when we see that weekly sweep and break, sorry my dear. So we move to the daily time frame now. What happens on the daily time frame? Daily time frame, we've already seen the break, right? A break, and there was what, a fair value gap. Now this is a smart money concept strategy. We are done with all the key levels. Now we are looking at what fair value gap, engulfing candle, double breaks and all that. So this is a fair value gap, right? After the daily break, there was a fair value gap. I'm going to name this the daily fair value gap for the daily time frame. Right? So now look at, remember, price is also reacting after a break of structure, after a reaction from this weekly zone. Price reacted there twice. One went up, react again, two, and we saw a daily break. And also this is a daily sweep. This is a daily sweep, right? So I'm going to label it now. A daily sweep. Now this is what will happen after the break of structure. Look for fair value gaps. Look for fair value gaps because that confirms that price actually wants to buy. So this is a fair value gap, right? This is a fair value gap. So we're expecting price to daily fair value gap. Sorry for the noise. Just bear with me. This is daily fair value gap. Now, but then something happened as price broke the daily structure, right? A daily liquidity was taken, reaction on the key level, weekly key level, and price broke the daily structure and price created an order block here. You see, this whole candle is an order block. Price failed to fill this daily liquidity and created an order block. But before price left the order block, price did something. Price, this candle, this whole bullish candle swept a lot of candles, which I call also a daily sweep. This thing swept a whole lot of candles, and this low was a protected low. This low became a protected low, right? Because price did not get there. So this low is our protected low, right? Price did not get there. So in the future, we expect markets to react at this sweep and break of structure. So if you change to 4 hours, what are we going to see when we change to 4 hours? Now remember, we are not buying all the way to the top. We're only buying all the way to this fair value gap here. Because there is also a tendency that price will react on this fair value gap, tap on our daily key level here, and still come down. So we are not buying all the way. We just stop at we just stop at this liquidity because price is coming to clear this liquidity for sure, for sure, for sure. Price is coming to clear it. This is a daily liquidity. Price is coming to clear. See how everything is being structured. You see how everything is being targeted. So mind you, we are looking at buy to sell. We're looking at buy to sell. That's our bias for Euro NZD. Now we're going to move to the 4 hours. The 4 hours is where we now enter. Now, if you still look closely, you'll see that this is also a liquidity and this is a daily what key level. Now, since we are now narrowing it down, we are now going down, 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 down. When you see a daily key level at this point, you should know that there should be a 4 hour key level below this daily key level, right? So that's what we are going to look at as we switch down to our 4 hours. We want to see the key level that is going to be below that 4 hour region. Now, this is where we draw the daily key level, right? So where do you think would be our key level for the 4 hour zone? So we should be looking at this zone. This is our number one zone for our 4 hours. So remember, we are entering from 4 hours, or we are entering from anything below. But 4 hours should be like your risky entry. You understand? Then this is another zone. So remember, this is a daily liquidity, and this is a daily key level. This is 4 hour key level, 4 hour key level. So we can just pick any of these key levels and see how price reacted. This is so perfect. Remember, this is our low that we are, our protected low that we say price will not come to. So I'm going to color it red. I'm going to make it bold. So we are expecting price not to come down to that low, right? This is the 4 hour key level, sorry. 4 hour key level, 4 hour key level. So anyone we decide to enter, because we say it's our risky entry because of the stop loss is always that's the what's it called? The stop loss is always high. That's why we consider it as our key level. But then if you don't want to enter directly from these 4 hours, we are going to now still watch because we are going to use smart money concept to enter on a 30 minutes or 1 hour time frame. Remember, this is what we are targeting. We are targeting this liquidity here because price might still react around this place and still sell down. Because remember, on a monthly, price is reacting on a key level, right? So and this is a clean 1:9 RR trade. So when price reacted on that key level, 4 hour key level, let's delete this other one because price passed it. We're going to delete this other one and focus on the second one below that price actually reacted on. Is H4 key level. So when once price, remember we are going to buy this on a single risky entry. We're just going to place a trade and expect it reacts, and so price actually respect it. So when we see that reaction, when price tapped and left on the what 4 hours, we now go to either 1 hour or 30 minutes, right? We now go to either 1 hour or 30 minutes. Now what we want to see in 1 hour or 30 minutes is double break of structure. We want to see, liquidity sweep, break of structure, and all that. So that is what we are looking at right now. This is liquidity sweep. First break of structure, say okay fine. When you see the first break of structure, there's every tendency, because there must be liquidity before you enter. Before you enter any market, sorry, there must be liquidity. So let me expand this. So that's why we we were now like, okay fine, since we did not enter from the 4 hours because of the this thing, we are now going to enter on the 30 minutes entry. So price broke first liquidity, first structure and second structure. This will now be taken as our liquidity. So I expect price to sweep this liquidity here, come down, maybe react on any of this zone here or here, right? React here, then continue the buy upward. So what we are going to do, we are going to, let's go to 45 minutes, and we're just trying to see a very clean place where we know that price might react from, you understand? So I've off the, okay, this is clearly a fair value gap. So let's go to 1 hour. We're just trying to see, okay fine. So we are going to use the 1 hour zone. Okay, let's see 2 hours and see. Okay, I think 2 hours is perfect. 2 hours is perfect. So this is what we are going to use. We are using the zone as our, small time frame entry, right? The zone, because there is a key level on that fair value gap. So we are going to just use this zone. Our stop loss will be here, just a little bit below here, and we are still targeting. We'll still be targeting that high, right? Because overall, that's where price is going to. So that's why we are trying to, like, next week, we are looking at buys to this point. Then we'll now watch how price react from here to give us the sell continuation. This buy is kind of a retracement, right? So this is what we are looking at for Euro NZD. I'm going to stop this here because it's raining right now. You might not hear me again, so I'll be stopping this here. Just know that next week we are expecting buys from Euro NZD. Expecting buys from Euro NZD from this point down to this point. That's 1:7. It's a clean setup. Thank you very much. And I will also, okay. I think if you can still hear me, I can do another one, right? I can do another one, and I'll wrap it up. Top down analysis down to our entry analysis, right? So this is for CADCHF. So this is for CADCHF. I'm already buying it because I bought at the 4 hour level in Sambo. So let's go to monthly and weekly to see where price is reacting from, where price is coming from, so that we can frame our entry, right? So on this case, we see that our monthly price was reacting on this key level here. The key level here, price was reacting on. Price rejected and caused a break of structure, right? Was it a break? Yeah, a break of structure actually. So yeah. So after price caused that break of structure, we move to our weekly time frame to still see what happened. We see that weekly also respected. Here was weekly, so I'm now going to start from the weekly time frame, right? Because monthly is too big and it's too much. So let's start from weekly and frame the setup downwards. So price reacted on a weekly, and what anytime you see price reaction, either you see a sweep of candle and a break of structure, or you see, if you don't see a sweep of candle, you can just look out for a break, a normal break. So in this case, we are seeing that price actually swept a candle. The weekly previous day weekly high was swept. Look at it carefully. This candle was swept, right? And the candle that swept it now broke this structure. But then once you see a sweep like that, you don't need to wait for other candles to form and go and break structure before you start. Once you see a sweep like that, experience have taught me that you just go right in to check what is happening. So on the daily. So once we see that, we now go to our daily. Let me delete this. So once you see that sweep and candle closes after a sweep, you see a bearish candle that closes below the candle is swept. You just go to your daily and start observing. Or most times you go to your 4 hours and start observing. But on the daily, what are we seeing? On the daily, we are seeing a fair value gap here. This is a fair value gap. Um, I'll call it fair value gap liquidity because it's actually a fair value gap liquidity. Fair value gap is a gap that tends to draw price. I've also talked about this in my previous videos. Please go and watch. So if you stop this thing, you see that yeah, it's actually the fair value gap, and this is kind of a double liquidity. This is kind of an equal high liquidity. So you see where we are going out. We are going out. Though we know that this thing is a sell on a longer term, but it doesn't mean if we see buys we will not take, right? So on that buy level, what did we see? On that buy level, what did we see? So when we are trying to buy now, we are going to still watch out for how price reacted on key levels, right? So you see that this is a weekly key level and price tapped on it and rejected and closed inside the bearish candle. So there was a bullish candle that swept liquidity, you understand, and closed above. So once we see that and we see that price has reacted like that, we just switch to the next time frame. You understand? So that will be the daily time frame. That will be the daily time frame. So when we switch to the daily time frame, we are also trying to look for what price is doing, what has price done, has price break the daily high, and I mean the daily structure. Was there a sweep of liquidity? If there was not a sweep of liquidity, then we look for a structural break, right? But if there was a sweep of liquidity, we'll go down to 4 hours again. Understand? So that's how it works. So there was no sweep of liquidity. We only saw like equal low. Then price will now look for break off. So this is where price was coming from. Did this, went up and came down. And so we have to use this our break, our daily break. So it was a structural break. But before that daily break, we saw pullback liquidity. That's internal structural internal liquidity. And like a fair value gap on the daily. So once you see this, what should be your response? So you should just go and mark out. So I'm going to delete the weekly. Okay, because the lines are just too much. So we have the weekly and then I mapped out the daily. Now, just like I told you before, whenever you see a daily key level, there is always a 4 hour key level below the daily because that's where price is going to go and tap. It's not on the directly on the daily. To tap on the 4 hour key level that is close to the daily key level, right? To balance everything. So what I did was, okay, fine, where is the 4 hour key level below this daily key level? And all we could see is this here, right here. So this is kind of the key level that is actually below. So that's where I entered from. Stop loss is below that low right here. So where are we buying to? We are buying to the liquidity. You remember the liquidity we saw at this equal high liquidity? That's why we are buying to, because price is definitely going to take out that. You can react on this fair value gap and give us, the continuation of the sales. So that is what we are also looking at for Canadian dollars CHF, which is a Swiss franca. So this is price already reacting, rejected, and starting to go up. So we're expecting a buy to this plot. So now, as price has reacted, what we have to do is to switch to, if we want to get the confirmatory entry, we have to switch to the lower time frame, 30 minutes, 45 minutes, because we are trying to, look at something. So now, if you look at the 45 minutes, you can see that price swept liquidity and, and all that. So when we see that happen, we have to switch down to the lower time frame, just to get a good entry, right? So we are expecting price this kind of liquidity. So if we want to buy this on the lower time frame, this is what we would have done. This is a liquidity, and after that liquidity, did you see any yeah, we are seeing like this, we are seeing like this spot here, and exactly that's why price came. So when we want to buy on the lower time frame too, you can see buy like this. You have to use smart money and frame your entry model. So we'll buy from there. Stop loss will be a little bit below. So you see how price action works using both key levels and the smart money concept, because everything works hand in hand, right? Everything works hand in hand. So we are targeting on a long run. We are targeting that high, yeah. Where we are targeting. So imagine 1 is to 15 RR and you bank on this trade. But this thing requires you have to be very patient for you to be running this kind of key level to key level and all that. You have to be very patient, and you don't need to trade every time. You don't need to enter market every now and every day. So you just target one trade, you enter, and you allow it to run for the whole week or the next upper week. So that's how I trade. So these are all the pairs I trade. Because I don't trade much and I don't trade often, I tend to enter a trade and hold trades for 1 or 2 weeks just to actualize, you know, my goal. That's why I trade all these pairs, because I like to trade all these pairs. It's just because of my trading, the way I trade. It gives me time to relax, chill. I just look at charts because I know the direction, I know how reactions work. I just enter and it gives me the final result. So this is where I'm going to draw the curtain. You've seen how I use key level on the higher time frame, come down to the lower time frame, and I use smart money concept, using fair value gap, liquidities, and what's it called, other blocks, as the case may be. So this is how I trade. If we look at all these things, all these trades, this is just basically how I trade. So I'm buying EURNZD and Canadian CADCHF. So that's what I'm buying for these two pairs. So we are going to draw the curtain here. If you have any question, if you have any comment, please leave them at the comment section. See you in the next one. Bye.